Alright guys, welcome back to today's MX section. I'm glad to have all of you right here. Today marks the beginning of one of the most important phases in your trading academy, in your trading journey. We are going to be discussing technical analysis. Exactly. That's the topic, that's the hot topic for today, guys. So I personally, I always used to cite myself as an example. There was a time that I didn't know what to look for and what not to look at in trading. I know you wonder why a lot of people come to the charts and just draw lines, random lines anywhere, everywhere. So those lines that they draw are what technical analysis is. So technical analysis is simply the study of charts, or maybe let's say price movements, let's add a little bit of sugar to it. Is the art of studying technical analysis is the art of studying price movement. Studying price movement to predict future behaviors. Alright, that's what technical analysis is. It's the art of studying price movement to predict the future behaviors of price. Simple as that. What I always tell people is to try as much as possible to simplify things, because trading is all about simplicity. There are 101 things that can make trading complex, but if you can be able to simplify that, then I can assure you you are on the right track to profitability. Alright, so technical analysis is simply the art of studying, or the art of studying price movement, previous price movement, to predict the future behaviors. Because just like any other system, right, price follows a pattern type movement. It replicates those movement, those data, right, every day, each and every day, day in, day out. Those things happen in the market day in, day out, day in, day out. So today we are going to explore deeper into this. Alright, so the key factors or key concepts in technical analysis are three commonly. I want to make this class as shorter as I could. Key factors of technical analysis. Alright, we have three of them. We have the first one known as the market structures. We also have trends, and then we have support and resistance. So in today's session we are going to be discussing on this. I would like to discuss at least two if time permits, but I'm not sure if that's possible. So I would like to go deeper into market structure first, then we'll follow on trends, maybe the next class or something like that. Alright, what are market structures? Market structure is simply the framework, or you can see the skeleton I like to call it the skeleton of price movement. Of how price moves over a period of time. Simple. It's simply the skeleton, like what market is actually doing, how price moves over a period of time. That's what market structures are. It simply shows you who is on control, the buyers or the sellers, and give you a clear roadmap of what might happen next. So that's what market structure is. It's like looking into the human body and looking at the skeleton. That's what makes us human beings. Those skeletons are what makes us human beings, right? So how does market structure works? How does it work? How do you just hop on your charts and understand what is clearly going on? How? And that gives that introduce this. How market structure works. Simple. Take market as a wave, right? The market won't just go up just like that, or just drop drastically, or just go sideways. Like, no, market moves in the pattern. Market makes a pattern. It moves something like this or something like this. It doesn't just actually just go up like a skyrocket. No, it moves more of a wave, something like this. Or if it's coming down, it will do something like this. Are you understand? Are you with me? So how do we identify this? We said market makes those movement over and over each and every day, and with the help of those, we can be able to understand what market is doing. The first one, we say we have the higher highs, known as HH. And then we have the higher lows, known as HL. And then again we have the lower lows, known as and then to top it up all, we have the lower highs, known as the LH. So those patterns is how market moves daily, in and out. So how do we identify higher highs? What are higher highs? Simply, when market wants to go up, it will make something like this, making a series of higher highs, not just going drastically up one time. No, it takes its time. Market takes its time to move in pace. So whenever we have a structure that has been broken to the upside, we said that previous high that market makes is known as the higher high. And after market breaking that structure to make something like this and something like this, we say that market is clearly making a series of higher highs, and in essence we can confidently say that this market is in an uptrend. Exactly. I will give you a second to know this, then we'll continue. Just look at it. When market is making a series of higher highs, right, the market suddenly just makes a high, retraces a bit, push higher to break the previous high, and make another higher high, retrace a bit, push up to make another higher high, retrace a bit, and then push up to make another higher high. We say that market is clearly in an uptrend. But let's not go fast. Let me show you. What I will do is, once I explain a chart movement, I will come on the charts, on the real charts, and then show you how it works. Alright, look at this. We had this low, and then market make this high, retrace a bit, makes a high, retrace, make another high, retrace, and then make another high. We can clearly see what the market is doing. It's making a series of higher highs, and then higher highs, higher highs. So whenever we see this, we say market, we can identify clearly what the structure of this market is, right? All right, let's go back. Now we've been able to explain what higher highs are. So what are higher lows? How do we identify them? All right, simply look at this. It's not magic, don't be shy. Look at this. Whenever market makes a high, look what happens. It eventually always makes something like this. That retracement, we call it the higher low, because whenever market breaks a high, it will eventually retrace, and then we have our higher low. The market will push that retracement, that little retracement that market will do. That is what we call the higher low. So whenever we see something like this, clearly market making a series of higher highs, higher low, we can clearly say that that market is in an uptrend. So whenever you doubt, or you are thinking what is an uptrend, simply I will always advise you to make things as simple as you can. So as simple as I can to define an uptrend. An uptrend is when the market is making a series of higher highs and higher lows. Simple. You see, that, my friend, is an uptrend. Always simplify things to the smallest you can. So whenever we see the market making a high series of higher highs, higher lows, higher highs, higher lows, we say that market is in an uptrend. Now let's go on the chart. Let me show it to you. We have it right here. You can clearly see that before market breaks a high, it eventually makes a retracement, and that retracement, we call it the higher low. You see, market makes another retracement, makes another retracement. So this little scenario that happens right here, we see that market is in an uptrend. Alright, now let's get to it. Let's get to the next step. Alright, how do we identify lower lows and lower highs? Simple. When market is making something like this consecutively, we say we have something like this. You can clearly see market makes a low, retrace a bit and then make another low, retrace a bit and then make another low, retrace a bit, and then continuously in a systematical order, we say that market is clearly in a downtrend. Or exactly, you can see market breaks the structure. We also have another break of structure and another break of structure. So whenever we see the market making something like this, we say that market is in a downtrend. As simple as that. Always simplify things as simple as you can. Now let's hop on the chart. Let me show you. Let me get this out of the way. This is a trade I took. I'm looking for something a little bit convenient. Alright, I have it right here. Right here, you can clearly see that market makes this low, retrace, make another low, a retracement, another low, retracement, another low, retracement, and then another low. So whenever we see market making this, we say that market is clearly in a downtrend. You can see another lower low than the previous low, another lower low than the previous low, and then another low. Right, so this shows us how the market structure is. Alright, but that's not all. We have the piece of the puzzle. Alright, let's top it up a bit. Whenever market makes this retracement, we call them lower highs. Why? Because whenever market breaks a structure to make another low, we'll clearly see that the high that market will make will not be as higher as the previous high, and then consecutively in the systematical order, that's what happens. You see? So whenever we have a scenario like this, we see market making something like this, we say that market is in a downtrend. Simple. A downtrend. You see? Simple. And now, if someone is to stop you on the road and ask you, or a friend, and ask you what is a downtrend, I'll always tell you to simplify things as simple as you can. So when the market is making a series of lower lows and lower highs, we say that market is in a downtrend. So guys, with those, this is how market structure works. That's why I told you it's the skeleton. You can clearly see the skeletal image of the market. Now by knowing this, you clearly know how the market moves. You see, let's complete this. We have the lower highs and then another lower high and another and another. You see? Voila. Alright, now let's get to it. I hope you are making it as simple as you guys can actually digest, because this is not complex at all. Trading is, if you can simplify trading, then trading is the best and most easiest skill out there. Just don't over analyze, don't do over, just don't do over, that's all. You see, every time the market is making a series of higher highs, you see that market is in an uptrend. And whenever a market is making a series of lower lows, we say that market is in a downtrend. So what is break of structure? What does break of structure means? I know that I did something like this, right, and said break of structure. So what does break of structure actually means? Now I am going to elaborate further. Let me draw this so that I can have a clear image for you guys, not to confuse yourself along the way. Alright, so what is break of structure? How do you identify break of structure? Simply, break of structure is when the market breaks its usual pattern. That means a higher high with a higher low. That means a higher high or a lower low. Whenever market breaks that structure, whenever market breaks a higher high or a lower low, we say that market has broken its ideal structure. Because now, let me note this. Let me note this. We have lower low right there, another lower low. Let me just come have it somewhere around here. We have our lower high and another lower high, and on this we have a higher high, another higher high, another higher high, and another higher high. But then again we have a higher low, and then this. Alright, so whenever a market breaks its usual pattern, now let's take this for starters right here. This is the initial structure. This is the initial structure, right? Look at what happens. Market, after that reversal, market just came and then breaks its usual structure. So whenever we see a break of structure, what we are seeing in essence is that market is signaling a possible reversal in trend. Because you can see when this market was coming down, something happened. This up the market happened. It might have continued to go up, but then when we have this to continue to show us that that market is in that same trend. Alright, you see clearly. This is what we call a break of structure. So whenever the market breaks its usual pattern, we say that that market has broken structure. I hope I am making sense. Same goes for an uptrend. Whenever a market breaks a higher high, right, to make another higher, to make a higher high, we say that market is in that market has broken structure. You see, right? So this is how we identify our breaks of structure. So always simplify things. Like this is how we identify break of structure. Breaks of structure is when the market breaks its usual pattern. Whenever market breaks a lower high or a lower low or a higher high, that market has broken structure to the upside or to the downside respectively. Alright, I hope you guys are not confused. Alright, now after knowing all this, right, after you've known all this, now why does market moves in structure? What is it? What is causing that market, that same market? Why does market moves in structure? I would like you to take a second, pause this video, and then ask yourself why. Right? So let's continue. Market moves in this structure because of two things. Simply, the most famous word in the trading industry, that's liquidity. It is the most famous word that almost everybody knows. Simple. Liquidity and order flow. So what is liquidity? How do you identify liquidity? What is liquidity? I know you've heard of liquidity. What does liquidity mean? So simple, and the most simplest way I will say to you that liquidity, the famous liquidity, is simply just money in the market. That's just it. That's the simplest I can explain it to you. It's simply the money in the market. Hedge funds and institutions, right, want to grab liquidity, wants to add money to the market in order for price to move in order. Are you with me? So liquidity in the market is simply money in the market, and what market wants is to trap as much stop loss as it can, as much people's stop losses as it can. It wants to trap people's order stop loss as it can. It wants people's money for as much as it can get. So more market moves in the market, market moves in such a way because it wants to trap liquidity. How does market traps liquidity? Now, for instance, you have a market that's going up, and then you just say, all right, this market is breaking structure, so by all means necessary, this market will continue in that same what's it called, trend. And then you naively just come here and place your trade, maybe your stop loss around here, targeting this high because you see market making something like this. So what markets will do is simple. It will first take you out and then goes up. So whenever you have people's order blocks, people's stop loss, somewhere around here, you see, market wants to trap you and I in this zone. It wants to grab people's orders, people's money as far as it can. So whenever market comes here and do something like this, we said we have a liquidity gap. Those things, those higher highs, previous highs, like places like this, for people that trade breaks of structures, you have, once after that moment, some people that have taken this short. So this push that market did, it has carried all the people's other stop losses that are here. People that took this short. Are you with me? So this process is what we call liquidity grab in the market. Let me just show you on the real charts so that you can grasp what I mean. Now look at this. This market was making a series of higher highs. You see, You see? So ideally what you will expect is market will come maybe to this zone, take your order, and then continue in that position, in that same downtrend. But look at what market did. So things like this, you see, all the people that have placed their order blocks right here, and that have placed their stop loss above here, all of us that have placed their stop loss above here, you see, market has came to that zone, collected their money, and then continue in its intended direction. You see, after market taking out those people's order blocks and stop loss right here, market continues in its direction, in its intended direction. So market moves in those structures to trap people, to trap retail traders like you and I in the space, in the market. So always look out. Okay, I thought I have written this. I wanted to write order flow. Alright, orders. So market moves in those structures because it wants to grab as much people's orders as it wants. And then, alright, order flow. What is order flow? Order flow is simply orders, people's orders that have been placed in certain areas. So what market will do, or institutions will do, is they want to sell. Now let's take a pair of shoe for instance. Now for instance, in the market there is this Nike Panda shoe that's worth maybe $1,000. Let's take $500 for instance, right? And then people like have, maybe let's say I have $450, and I went to a shop. Are you with me? I said that I want those pairs of Panda shoes, those pair of Nike shoes at the rate of $450, right? And then after me, 100 people come by and want to buy that same shoe at the rate of 450. What will likely be the outcome of what's happening is market, and that price shoe will drastically drop to our demand, because market moves in demand and supply. Am I making sense? So those order flow, market wants to fill people's order as much as it can. It wants to collect people's orders as much as it can. So someone that has a shop cannot look around, just look sideways for people that want 100 pairs of shoes. He has to reduce that price. So price or market moves to those areas that have order flow. Now for instance, this trade, right? Let's say there is some people like me that wanted to short this VIX 10 when it was in its downtrend. Let me show you the alright, this is the trade that I took. You can see a lot of people came right here to place their orders. You see, you can see people, a lot of people's money were in this zone because they see an opportunity to continue in the trend. You see, and see right here guys, we have a liquidity graph right here that I mark as the dollar sign. So those things are what makes market to move in structures. I hope this class has been exciting, and I hope you guys don't have any questions further. In our next session, I will look to it that I explain what are trends, and and then support and resistance. That's where we will explain supply and demand, support and resistance, short for. In our next session, I will see to it that we explain trends. If possible, then we will do support and resistance. So guys, stay locked in. Let's become profitable together. Stay safe.